All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of Gar Capital. It is Tuesday, September 19th, 2023. Glad to be with you this morning and every morning at 9 a.m. Eastern Standard Time. If you haven't already, make sure to hit that like button, turn on notifications, subscribe to our channel. Really appreciate the support. Love doing these videos for you. Let's get to work. Before we begin, as you can see on the headline, pretty much Flatsville. That's when I typed it up. We're getting a little bit more of a pullback, but the title is not misleading, I hope. With that being said, we're just going to go focus on the headlines, focus on some charts, answer some of your questions. And again, I don't expect much. If you remember yesterday, the Dow was pretty much flat. S&P was pretty much flat, just chop. So again, let's go around the horn and get started. Dow futures down about 64, NASDAQ down 38, down about a quarter point. S&P 44.93, down 0.18%. Again, still kind of stuck in a range since Friday at 11 a.m. Kind of stuck within about 20 points. Not much to do there. Russell 1851, Flatsville. 10-year Treasury yields continue to climb, 4.357. Again, we do have a big catalyst tomorrow, the FOMC rate decision. The volatility index up 1.93%, 1427. I think we have a record amount of days or sessions without a 1.5% decline in the stock market. Volatility is very cheap right now. Again, that's insurance, right? For any kind of craziness. So could we get a spike here in the future? We talked about seasonality on the VIX on Instagram. We talked about seasonality here with stocks. October expecting a pullback. Guess we're kind of following the script. I mean, nothing has really changed other than the fact that we fell on Friday. Yet, in a rolling month basis, we're still, the quarter's still green. Nothing has really changed. It's just pretty much fat and flat. Gasoline futures, $2.71. That's up 0.79%. Gold futures, $19.57 announced. That's up. Silver futures, $23.59. And the reason that is the dollar is pulling back. We're now below 105 currently. So that's going to help commodities. Let's go and take a look at the euro dollar, 106.95 in Forex line. That's flat. 147.80 dollar yen up 20 pips. Pound dollar 124.01. That's up 15 pips. Bitcoin is up as well, 27,215, up 1%. Again, nothing to get too excited for. 1642 for Ethereum, up 0.12%. I mean, if your dollar cost averaging, none of this really matters. So just kind of rolling with the punches here in flat town for crypto. I mean, we get volatility here and there, but not much going on so far. So let's go ahead and talk about some headlines this morning. And been up since 6 a.m. reading the markets, as always, my morning routine. We had the futures open green this morning. Let's go over the headlines here on our market blog. If you don't have access, make sure to go to our comment section, the description box, and I'll give you the link there. It's on our website, www.gar.capital. We'd love to have you on the blog. It is free for all. Target said they will hire 100,000 employees for the holiday season and offer deep discounts starting October. That's according to Reuters. Remember, they did break that 120 level. New multi-year lows for Target. Now, a lot of people are probably saying, are you going to buy here? Are you going to buy here? I think we could just wait. We don't have to do anything yet. And trust me, I want to. But we may get a little more. Target's on the radar. But we don't have to do anything when rates are really, really good for cash at this moment, especially when we're expecting a pullback in October. But it is something that I'm watching extremely carefully. Target might be a great value as sentiment is pretty much as depressed as it can get. The United Auto Workers Union said yesterday it will expand its strikes at the legacy Detroit automakers at noon on Friday if, quote, serious progress isn't made in negotiations. According to Bloomberg, Instacart has priced their IPO at $30. We got IPO market. So again, get some risk appetite out there. But like we talked about with new IPOs, if we get a flood of IPOs, what's going to, where's the capital going to come from in order to buy these hot IPOs? The last one we had was ARM, the British chip company. If you remember in 2021, we had a flood of IPOs as deal making was hitting its stride. And again, you start getting pullbacks from the stocks that everyone loves, mega cap tech, in order to fund or buy these stocks in the IPO market. Right now, we're starting to get a little bit of steam. I mean, we've got to see how Instacart does, and we'll kind of determine where we go from there because that's been one that most have been talking about now for a couple of years. They will begin trading midday tomorrow. That's Instacart. That's ticker sign CART. Best bet when it comes to IPOs. Learn from my mistake with Lyft. I bought the Lyft IPO and that thing tanked. So best bet, wait for the first earnings report, see how the guidance is, and go from there. Yeah, at least see if they actually make money. That'd be a good idea before you invest in anything, right? Unless you're trading it, different story. I don't know when the options market is open for Instacart. Quote, we performed a number of channel checks for iPhone 15 pre-orders in China. Overall unit orders were down 5% versus last year, with 4% lower Pro mix on a year-over-year basis. We view this as a better indicator for demand versus delivery times, which are influenced by production shortages and supply chain snags. Apple was up 0.43% pre-market before we started getting a pullback here, and that was from Barclays. And I do have Apple calls. I have 180 calls on Apple, and I really like this setup, so that's a good segue into here. I went ahead and marked these here in green. Those are your gaps on the 1 hour. Now, again, could they be rather redundant in terms of like there's so many gaps? I mean, there's probably gaps in the 5 minute, right? And again, the only reason I'm looking at the hourly chart here in terms of the gaps, and let's be completely honest, is to justify my analysis. But I do like Apple to go higher. Again, good report in terms of production. Again, Barclays disagrees, but again, there is some demand on iPhones, at least for the new one. So really all I'm looking for here is 181.28. Again, we're pretty much flat-ish from where we closed. We did break above 179.41 yesterday. I think we were up like 10%. There's a lot of volume on this. If these gaps were to go, this might be a bag play. The problem is that we do have the Fed tomorrow. And yes, of course, people may think, well, what does Apple have to do with interest rates? And the answer is nothing. But again, they're part of the S&P. We have now commoditized stocks by putting them in ETFs. So, one stock moves, it affects a whole sector. ETFs get affected. So again, that's kind of like that domino effect. So Apple has really nothing to do with interest rates or the Fed. They don't care. They don't need to care unless, we have some kind of recession or consumer pullback, which is the Fed wants. Fair enough. But in terms of demand, at least from what I read, other than the Barclays note, demand seems to be pretty good in terms of production. The market is just pulling back. Again, NASDAQ pulling back as well. Apple's holding up, at least relatively speaking, better than the NASDAQ. So the question is, do we get to 180? And that's all we're going to wait for today. My target is 181.28. Apple had a great day yesterday. Let's see where the market goes. On the flip side, in terms of puts, I actually wrote this down yesterday, and it was a really, really good note. I'm glad I did, and I want to start incorporating them. I want to start putting in our premium signals recap, kind of the stocks I was watching and the notes on what happened during the day. For example, I wrote this here. Here's a list of reversals that I was watching today, where alerts were either broken from our watch list, if they break, but again, we still have to kind of use our brain and see, hey, do we get this or not, or we're just firing away. So again, no trades are open on any of these. Crude futures twice broke my alert from 1.3% to flat to up 1.36 at close. That was the actual volatility on crude yesterday. On really no news that was anything special. And you could see it right here. This was Monday. This and pull back. So up and then down. And then flat and then up. That's not the best right now. At least at a point where we're on a Fed day. So again, we kind of want to make things a little easier. We don't want to have a lot of stress. Microsoft broke down my alert at 326.31 and then closed at 329.26. There you go. There's crude oil going. Oh, just a heads up on crude oil. This is a great one. Crude oil is up, starting to break multi-month highs. We know that. We talked about that breakout. Look at XLE. You would think XLE would have broken out above that 93.82 level. It moved higher. Maybe if I would have bought time on XLE, wouldn't have made a difference, to be honest with you. Those premiums are probably hit. So XLE and crude oil futures not working one for one. Happens. But again, I just wanted to go back to that trade from last week so we can learn from it together. We were talking about Microsoft. 326.73 is my alert. Again, we knocked on the door yesterday and then we had a reversal. So if we were holding puts, we'd be red at that point. So let's see if we knock on the door on it. If we break below that, we talked about it on the watch list. I believe there's a gap to fill on Microsoft. I might be wrong. There is not. So let's go to the 4 hour, give us a little bit of context. And this is not the first time that Microsoft has had this wedge breakout or this kind of movement of a breakdown. It's nothing new in terms of the stock. You could see plenty of movement, upside wedge, breaks out, upside channel, breaks down, then breaks it up, then comes down, breaks out. It's just chop, just kind of slow melting chop. In terms of the daily, you're holding on to the 100. That's where we closed. Again, the idea is to break below it if we're looking for puts. And again, at that point, you're just looking at what volume is best out there. I would assume the best one out there would probably be the 325s since it's closer to the strike. And then you start getting into the 320s. 320s would be a little out there. Again, I would not recommend to do that. And the simple reason is that it's too far out of the money. And again, you have a huge catalyst. One slam and you're out of the money and we start bouncing, you're gonna get crushed. So if anything, you break 326.73, you want to keep it kind of close to the strike. See if you can squeeze out 20% and then just kind of move out before the Fed or leave a runner. Let that contract do the heavy lifting depending on the price. But again, it is knocking on the door, breaking below the 100-day moving average. So that's something that I watched yesterday. I'm glad I didn't fill that because it's too choppy. The best one out there was Apple because of the relative strength against the NASDAQ, as the NASDAQ closed basically flat on the day yesterday. Let's see if I can bring that up. Here it is. NASDAQ was up 0.01% with Apple being up on the day 1.69% yesterday. So Netflix, which we like for more downside, that was another watch list discussion. 392.60 to close at 394.40. So that bounced there. So not much of being short would have wasted time as well. So again, sending these out would have been just adding more pressure to the fact that we already have a catalyst where we really don't know what's going to happen. We have to focus on just the name itself, fair. But we know that the actual macro matters. Yields matter. And again, up or down. I shorted last week, got hit. Went long last week, got hit. There's no real need to push the envelope either, even though I do like Apple and I think we catch it. It's setting up for, in my opinion, bags, meaning multiple 100% of return if those gaps get filled. That's really it. You're talking about deep in the money if we get there. Just to kind of recap it here on the hourly chart. This is on a 20-day basis. You get to 182.50, which is a possibility, obviously. You may be setting up for an inverse head and shoulders if we can hold at least possibly the neckline here around 176, 175. If you break 181.28, then it is set up for a head and shoulders, inverse head and shoulders, which is a bullish pattern. You're going to fill this 1 hour gap at 182.50 with some, luck with the Fed, possibly. Again, kind of hard to depend on that. You're talking about 189 possibility. Not saying it can't. It's likely, no. But you get to 189.51 and you're holding the 180s. Not bad. And again, we know volatility works both ways, up or down. When everyone is expecting down, what happens? You get a short squeeze. Everyone expecting up, what happens? You get flush. That's kind of where we've been at in this market with just headlines alone. So again, that's Apple. Netflix. I think the alert here was, which broke more downside, 392.60 to closing at 394. That's a kind of a move of about almost $2, about $1.80. So even holding that would have just kind of wasted time in terms of the premium. Again, that's a waiting game as well. I'm watching 392 for a break, and then you can probably do the 385 puts. But again, here's the problem. The Fed, right? And you would think Netflix has zero to do with interest rates. They're not a bank or anything like that. But again, it's the ETF commoditized world that's kind of moving things around where, since Netflix is a big part of QQQ, it's going to bring down the index itself. It is weighted, not heavily, but it's weighted. So there is a gap to fill on the downside on Netflix. I like it to 385. I'd feel more comfortable if it broke 392. But to add more risk ahead of an event like the Fed and the FOMC, again, I'm leaning towards the short side because there's really no reason to buy. I mean, we need some kind of path where at least the Fed says, okay, we're not going to raise this time, but we're going to be fluid. That's not something that, we can count on. If they said, hey, man, we're pausing and that's it, think about that. That is kind of the ceiling for interest rates. If they pause, great. Now bonds are going to be rushing to be bought. Rates are going to go down, so on and so forth. But the problem is that we don't know the rate path. is this 2% inflation target for the Fed a hard target? Meaning, no matter what, get me there, or we're close, we'll wait and see. And they have not hiked before. Again, we have to see tomorrow. The expectation is that they won't hike. They will not hike this round, and then they will hike in November. That remains to be seen. All of this is just talk. What's the reaction of the market? That's really it. That's kind of the deal. Pick the right horse, get the right direction, and if you're right, you're happy, and if you're wrong, well, you're not happy. That's kind of a zero-sum game, unfortunately. So 392 breaks, 385 is my target. That's where we are. Good morning. Do you dollar cost average with crypto? I do for Ethereum and Bitcoin, and I don't put much, man, to be honest with you. It's just to keep it going on Coinbase. That's really it. I like Bitcoin long term, absolutely. I just don't want to go out right now and buy some when it's not needed. I mean, see if you can average. If we had a slam, yeah, if it was really on sale, but 27,000's been kind of hovering around there. Not much to do on crypto, and that's kind of crypto's thing. Is there's always something to look at, right? On the weekends, remember weekends are for crypto. Not anymore. Crypto is hibernating. Not much going on. There was a note here yesterday at 5:23. This is from Goldman. It says iPhone demand outpacing supply, sees more than 20% upside in shares. You would think Apple would be soaring right now, but since the market is unsure about tomorrow, that is where we are in terms of the market. We also had rates go higher. Saw this as well. Could we see risk on? Yeah, this is the medium-term equity sentiment from JPM, possibly setting up for a short squeeze. I mean, you're right at neutral, guys. It's Flatsville. Both have really great arguments. The bears have an argument. Hey, the world's going to collapse. Fair. I mean, that's usually the argument, but stocks are just priced too high. It's just too expensive in this backdrop. Fair, and I can understand. The bulls, my side, they're thinking, at least long term, is that stocks eventually always go higher and things always bottom out. At the end of the day, we have a strong consumer, strong GDP. What more do you need? That's kind of the bullish call. Everyone is too negative, and if you have the bears saying the bulls are too positive, so you're kind of getting that push-pull. What do you do here? I mean, you're really just trying to catch trades with really good risk-reward setups and high probability, meaning kind of closer to the strike. You don't want to kind of make any mistakes into the point that one headline crushes you. So not too far out of the money. Don't put too much at risk because you just don't know. You just don't know. It's at stalemate right now. That's why the market yesterday was absolutely flat. Unless you're just getting positioning. If we pull back today, maybe that's positioning ahead of the Fed, and then we'll just retrace that move. If we go higher to today, kind of front running the deal, it's going to pull back to where we are. It's like, how do you trade that? You don't. You just watch and learn and write stuff down and you journal. What is a good price to get in BTC long run? If it was up to me just starting out on Bitcoin, what I would do is just put X amount of dollars every month. Don't even sweat it. Make that your piggy bank. So for example, if you're the type of person that says, hey, you know what, I cancel my Netflix, I'm saving $25 a month because I hate it, I'm going to put that 25 into Bitcoin every month, for example. That's a good way to do it. And then just let it go. Don't even think about it. And before over time, in 10 months, I mean, $250 isn't exactly, you're rolling in the cash, but that's savings that you did. And that's in your investment account. You could do that with anything, stocks, bonds, whatever works. The idea when it comes to investing, the old saying goes, invest early, invest often. The best time to invest was 20 years ago. The second best time to invest is today. It's always been that way, regardless of anything. Because I think what most people think of investing as just like stocks and bonds and crypto, I got to pick the right horse. I mean, it's if you really want to make it easy, I've always said, just buy an ETF, buy an S&P fund, and don't look at it. Just leave it alone and just save it. Pretend that's a piggy bank. Would you go into your piggy bank every day and count the coins? Probably not. Let's do the same with that. It's just you're getting paid for your patience. You're getting paid for your discipline. That's dollar cost averaging. If you can do that, you're going to be fine long term, always. All right. Thank you guys for the questions, Conrad and Lucky Bamboo. I like that name, Lucky Bamboo. That'd be a really cool PlayStation name, Lucky Bamboo. All right, guys, we'll leave it there. Have a great rest of your morning. Thanks again for joining me today. Wish I had more to discuss. Again, kind of Flatsville, just watching today. No need for putting a lot of risk on. Seeing Apple pull back a little bit here. not too concerning. I'm watching Netflix and Microsoft. We'll see how the rest of the day goes. I will see you guys on the blog on Discord. Have a great rest of your day. Cheers.